One thing that many traders struggle with when trading supply and demand or smart money concepts is finding the right zone to buy from. Now, if we take a look at this example, we're in an uptrend. We have a reversal point here, a bullish move, a corrective move, and a bullish move. So we can see here we are clearly in an uptrending fashion. Now, sometimes in uptrending markets like this, the market is going to form multiple demand zones, and you're not going to be sure which one to buy from. Are you looking for price to come into here to buy, or are you looking for price to come into here to buy? Now, this actually leads to a lot of losses because traders will buy as soon as we hit this first zone, and they'll actually take a loss expecting it to do this, but what it really does is push down to this point before making its bullish run up. So how do you actually identify which is the best zone to buy from? That's what I'm going to help you with today. So in this video, we're going to be talking through 4 primary points. Now, the first is a zone efficient? Inefficiency or efficiency in the market generally refers to, has a zone been retested? So in a price move like this, we generally are going to have an imbalance left open here, which is inefficient pricing, and an imbalance left open here. Basically, large impulsive moves that haven't been retested. When a move does this, it's efficient. But when it fails to return to that demand zone, it leaves an inefficiency in the market or an imbalance in price. So imbalanced zones are much more likely to be refilled. For example, if we have an imbalance here, but we have an imbalance here as well, it's very possible and very likely that the low zone is going to get retested because we still have imbalance and inefficiency to fill. Now, the second pointer is the extremity of the zone. An extreme zone is a zone at the bottom of a trend reversal, and a normal zone is just a continuation zone that happens in the trend. So in this example, let's say we had a downtrend coming in, we hit this point. This was the first higher high and higher low in the trend. So this actually shows market reversal to the upside. Now, being at the bottom of that price move, this zone is an extreme zone. If this extreme zone has that inefficiency leading into it and it still hasn't been retested yet, it's very, very likely that at one point or another, the extreme zone is going to get retested for a trade. So I always prefer extreme zones for my trades, especially if I'm using a buy limit or sell limit, because it greatly increases your risk reward and it greatly reduces your risk of losing as well. So always think about, is it an extreme zone or is it a standard zone? Now, the third pointer is, did the zone cause a large impulsive move? In a trend, we have corrections and impulses. The impulses are the large movements in line with the trend. The corrections are these little pullbacks against the trend. Now, if a zone has formed a strong impulse, so a movement something like this, that is going to be a high probability zone to buy from. If, however, a zone has formed, a very slow, choppy bit of price action on the way up, but then we come in and we form a strong impulse zone there, then in this example, the second zone, the higher zone, is going to be the one to buy from because we don't really have a large impulsive area to come and retest, which leaves us with not a large or high interest imbalance or inefficiency into that price point. And the final pointer is, does your zone exist on the high time frames? Many, many times I will see a trader send me analysis of an uptrend like this. They're looking to buy from this demand zone. They do buy from the demand zone, it doesn't work, and then they're confused of why they lost. They then shift up to the higher time frames. Say they were taking these trades on the 5-minute. They shift up to the 30-minute time frame, and the zone doesn't even exist. The one they were buying from is clearly not visible on the chart, whereas the other zone, the extreme zone, is visible. So if you bring the high time frame analysis into it, as we always should, always reviewing multiple time frames, you will actually see that a lot of the zones you're targeting for entries, when you're confused in a situation like this, are not actually existent zones on the higher time frames, and certainly not high probability zones, because the other zones are much more prominent and much more visible. So what we're going to do now is move over to the charts and take a look at some examples in the candles. So we have an example here on GBP USD on the 5-minute of an early sign trend reversal. We have the high point, we have a higher low, but then we have a lower high, we have another lower high, and then above this higher low, we actually have a break of structure. So this is the first break of structure in this little trend. We then had a second break of structure, which also broke some more significant structure back here, telling us that we are now moving into a downtrend. Now, the first thing to do is work out, are the zones imbalanced? We obviously have the extreme zone, which started the trend, and we have a secondary zone around this point, both of which are imbalanced. So if we mark out the imbalance, both of these points, we have price areas that have not been filled through. Now, initially, what's that going to tell us? Well, both of them broke structure, so that's a good sign. That means both of them are valid. But we do have an extreme zone, which is obviously favorable, with an imbalance leading into it. So right now, the extreme zone is going to be the point of interest for me, due to the fact that it's imbalanced and it still needs to be retested, being that extreme zone in the trend. Now, if we look at all of the zones before that, we can see that this area here was retested, and this area here was retested as well. But this third one that we've now formed is imbalanced and hasn't been retested yet. So while this one did break the structure down and is looking quite impulsive, we still have this open space and a very clear target area to reverse in, due to the fact that we still have that imbalance, and it's the first zone in this current little sequence to not be retested. So that leads us on to the next point, which we have already really covered. Did the zone form an impulse? Well, this zone did form a large impulse move down, which broke the substructure. This move also formed a large impulse down, both of them quite fast, strong movements. So that's not really going to tell us too much. That is why we have to have multiple confluences and multiple readings of each zone. Then point 3, once again, is the zone the extreme zone? Well, this one is the extreme zone, and it does have that imbalance through into it. So right now, this is obviously going to be my target short point. We have an imbalanced extreme zone, which did break the first substructure. This one could be watched, and it's still a valid zone. Now, if we were to get a push into this point and then a break of the structure again, this would then become a high probability area to sell from, because it would really show us that this zone is indeed valid, because we'll have seen a retest and then an impulse from there. So that is something we could look for, potentially to continue the short. But until we actually go and break whatever structure low is forming up at this point, we are still going to target this extreme zone. So if we just see how the market plays out, we will indeed see that we initially get a nice reaction from this point. However, when the market comes down, it fails to break that low. Now that actually then leads to an impulsive move, which is pushing towards our extreme zone. And once we've seen the high of this move swept, what we could go ahead and do is place on a sell limit. Now we could set a sell limit around the midpoint of that zone. If we just mark that up nice and accurate, stops over the previous high, just to allow a little bit of wiggle room for this trade. And then let's just say, for example's sake, we'll target the previous lows. So that is a 10R position. And if we allow the market to play out, we will see we are triggered in very nicely. Nice reaction of that zone. And then we begin to move to the downside, fulfilling the profit target after a little bit of sideways movement. So as you can see in this example, it came down to the imbalanced extreme zone. If we have an imbalanced extreme zone, this is going to be the high probability point to sell from. Now onto the final pointer. Does the zone exist on the higher time frames? If we move up to the 15-minute time frame, we can see that just about this zone does exist. And if we move to the 30-minute time frame, we can see that this zone initially, the initial zone we were targeting, basically doesn't exist. Okay, so if we grab this tool and extend it down to what the 30-minute zone is showing us, we can see that the extreme zone does exist, but the normal zone doesn't. If we scale back to the 5-minute, you'll see that there was no initial retest here of that 30-minute zone. So you can see from what I've showed you so far that it's all of the confluences coming together that allows you to find the best zone to sell or buy from. The major thing is if you have an inefficiency leading into an extreme zone, that is going to be the high probability zone to target. This is also going to be the zone that normally shows up when you go to those higher time frames. As you can see by going to the 30-minute time frame like we just did, this original zone completely disappeared. We can see that it is simply just an imbalanced price push down, which actually leaves only the 30-minute zone at the top to be a target zone to sell from. Obviously, when we go down to the lower time frames, this zone does exist. So it does have a little bit of weight, but when we compare it to the strength of this zone on the high time frames and the imbalances and the fact it's the extreme zone, that's going to give us this zone as the primary selling point. So what you should be doing when looking for the ideal zone to sell from is first of all finding out which is the extreme zone and which is a normal zone. The extreme zone is going to hold more weight. Have the zones formed large impulsive moves? Are the zones imbalanced? Is there inefficiency leading into the extreme zone? And do the zones both exist on the higher time frames? When you do this process, you're going to see some of the zones are good, some of the zones are not as good. And what you can actually do then is work with the zone that makes more sense and the zone that has more weight behind it. So I hope this short and sweet video has given you something beneficial to work with. And what I would advise you to do now is go to the chart, use the past price data tool on TradingView to actually look through and backtest this process. Find the zones, find out which zones are the extreme zones, which are the normal ones, see if they're imbalanced, if they have large impulses coming out of them, and then if they exist on the higher timeframes. You can then actually review the price action that came out of the zones and the outplay and the outcome of each movement and learn from that. The best way to actually learn is to get the education presented to you, as I have now, but then to go and use this education and use this knowledge and spend a bit of time studying.